Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 9th of August 2019, so welcome everyone. Welcome to this Friday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD bank website here, but specifically our JFD research page, where you can go in and have a look at different analysis that we do on a daily basis, and I believe you can find some of them useful. So yep, feel free to check us out here, guys. So, but for now, let's jump into the charts. Now the first one I want to touch on here is the DAX, the German index here. So overall continues to drift lower here, or I wouldn't say actually overall, but in the from the short-term perspective, it's kind of still trading lower. So from the high of the 25th of July here, you can see we have this nice downside resistance line, which continues to kind of keep the price down for now. So of course, after selling off, having a nice sell-off here in the beginning of the week, the index recovered some of its losses and it managed to push higher. And this is the scenario that I kind of showed you, and I talked about this in one of my previous videos this week. So basically, we're still kind of hoping to see a bit more upside here, a bit more correction, and we'll keep a close eye on it, because yesterday the index closed near the around the 11,800 zone. So today, looking at the cash index right now, we can see that the index is it's kind of slightly below it. So in a way, it's very close to this downside line. In a way, it might not even try test that. So it had a nice touch of the on the cash index. It had a nice touch of the 11,835-36 zone. I talked about this one previously. So now we can see that it's a little bit retracing back down. Of course, it will be very interesting to see if this, let's say, starts selling off, will it actually reach the levels, the lows of this week. Initially, we will target the 11,620 zone, which is the low of the lowest point of June, but slightly below that, we do have the area near the 11,550 zone, which is near the high of the 29th of March. Also, as you can see that this week the index almost managed to hit that level, but failed to do that, and we saw this one reversing and pushing back to the upside. So for now, probably the suggestion here is going to be very careful in a way for us, let's say, to consider the upside, or at least some higher levels. Well, ideally we would like to see a nice good push above a break of this downside resistance line, and ideally a push above the 11,987, or in a way you could round it up towards the 12,000 level. So if we see a good push above that, then yep, in a way it increases the chances for DAX to push further up here. Now again, don't get me wrong, there are a bunch of good obstacles here above, which could kind of play out nicely. So for example, one of which could be this one, the 12,130 zone, approximately around there, marked by the low of the 1st of August, and it also kind of currently coincides with the 200 EMA here on the 4-hour chart. So that's why, guys, even if we see a push above the 11,887 or the 12,000, keep your eyes on this 12,130. I mean, like I said, because around here we do have that 200 EMA, which could in a way also help to keep the price down. But if that fails to withhold, then yep, we could see a push back up here towards the levels that we saw here in the end of July. But again, that's in terms of the upside, of course. For now, the main scenario is still to the downside, because even this move higher, for now we're classing that as a correction before another leg of selling. So keep your eyes on this one, guys. DXY, very quickly on another index here, which is the dollar index, and I talked about this one previously, and you can see that now the DXY has stalled, and for the whole week it kind of is moving sideways, and it's not doing much. So after kind of breaking this key area of support near the 97.75 76 zone, I've talked about this one previously. After breaking that level, the index kind of drifted down, tested this upside support line taken from the low of the 25th of June, rebounded from it, and of course it overshot a little bit actually, but then kind of you can see that it continued to hold nicely at all the other times when it tested that line. So for now, what we're going to do here is not only that we're going to keep an eye on this upside line, but also we're going to keep a close eye on some of these key potential breakout points. So if we see the the index traveling back above the 97.76 zone, this is where it could become a little bit more interesting for the buyers. We could see maybe this one pushing a little bit higher here, initially aiming for the 98 zone. And slightly above that we do have that 98.19 20 zone, approximately around there, and then like I said, we'll take it from there. We'll see what it wants to do after, but again, initially the 97.76 zone, that's what we're going to be looking at. If we get a nice pop above it, then yep, we will aim for slightly higher levels. In terms of the downside here, then in a way, if we see a break of this upside line, that's going to be part of the bearish scenario, because still for us to aim further down, ideally we would like to see a drop below the 97.20 zone here. This way the index would confirm a forthcoming lower low here on the shorter time frame, and we could see this one sliding maybe all the way towards the 96.67, which acted as a fantastic area of support here back on the 18th of July. So again, like I said, keep your eyes on these two levels, and let's see how that's going to play out. Now jumping into a few pairs now. So USDCAD, very relevant today, and I kept talking about this one for the whole of this week. Of course, today we do have the employment figures for Canada, so be very careful around there. Yesterday I talked about this one in my Traders Tea Time, and we were kind of pushing here a little bit higher, but I was saying that. And by the way, we was testing the pivot there yesterday. The pivot was around here, and it was testing that, and this is what I was saying, that if it holds below that pivot, then in a way we could see this one reversing back down. But to get more comfortable with lower levels, we need to see a good drop below the 1.3267. We got that perfectly, but initially what I was saying, that we will target this upside support line. A bit of a tentative one, but you can see that it played out nicely, so it held the rate from falling lower. Now again, as you see, I have the arrow here kind of drawn through straight through this upside line. Now again, like I said, we do have the data coming out today, so if we get some good data, good data from Canada, then in a way we could see the Canadian dollar strengthening and pushing maybe lower here. But ideally, to get, let's say, comfortable with further declines, ideally we'd like to see a drop below the 1.3170. Now don't get me wrong, I mean, I do understand that this is quite a bit a good move here, could be, so that's why what you could do here from the very short-term perspective, if you see a drop below this little low here, this current low near the 1.3208, approximately around there, because this way the pair would not only break this upside support line, but again would confirm a new low for today, and we could see this one sliding towards this 1.3172 zone. So that's why if you're willing to capture something like that here, guys. But again, for those who are more on the cautious side, you could in a way wait for a clear move above below the 1.3172 and then aim for further declines. But again, I'll repeat myself, all this is in the scenario if this upside line fails to withhold. If it continues to hold, well, we could see this one pushing back up here. Now we will probably drag this one, this arrow here a little bit lower, because if we see a climb back above the 1.3267 zone, in a way it would mean that the pair is not willing to kind of, or I should say the bulls are not willing to give up on this pair yet, and we could see this one maybe traveling back to the highs of this week near the 1.3330 or the 1.3345. So keep your eyes on that one. Also, another relevant pair, GBPCAD, and not only that it can be affected by the Canadian employment numbers, it could also be affected by the data that we're getting from UK today in about 2 hours, 2 hours and 20 minutes, something like that. And of course we'll get the preliminary GDP numbers for UK, and of course the manufacturing production figures, trade balance. So in a way, long story short, basically, if we see some disappointing data, I mean, this could continue falling. I mean, we could see a break of this upside support line. I talked about this one yesterday. We were still trading around here. And initially what I was saying that keep an eye on this tentative upside line. If it holds, we could see this one maybe reversing and pushing back to a little bit higher here. The only thing is that that little higher will be only up until this downside resistance line taken from the high of the from the highest point of May of this year. So in order to, let's say, get comfortable with the upside here, ideally we would like to see not only a push above this downside line, but also a break of the 1.6253, 54 zone here, and then we'll aim for slightly higher in levels initially, like the 1.6440. But again, before we could consider this level, we need to get to that level. So in a way, for now, like I said, if this upside line holds, we could see a nice rebound and a push higher. But again, be very careful, because like I said, if the data comes out bad, then well, we could consider further declines here, especially if it starts breaking below the 1.6011 zone, 1.6010, approximately around there, because the next target for us could be around the 1.5957, which is near the lows of the 31st, or near the lowest point of July. But if that fails to withhold, now this is where it could turn out to be very ugly for GBPCAD, and we could see forthcoming lower low here, and further declines could be possible. So for now, be very careful with this one. Let's see how this is going to play out, and be very careful during the data, and on this pair specifically also be very careful during the Canadian data. So keep your eyes on that one. GBPCHF, also something that we're keeping a close eye on, and basically with this one, it's a tragic one. I mean, it continues to slide. There seems to be no hope here for the buyers. Every single time the buyers get crushed, and I mean, you can see that the pair, let me just actually jump into a daily chart on this one, because it's going to be much more useful. So as you can see, it continues to trade below this downside line here, taken from the high of May, and I mean, any pull back here to the upside, I mean, you can see that it gets crushed. And for now, looking at this picture, you can see that the pair is balancing near its key area of support, near the 1.1793 zone, approximately, or yep, around there, 93 zone, approximately around there. If we see a drop below this confirms a new lower low, a forthcoming lower low, and the next target for us could be around here. Let me just drag this one back into history. This is what I'm talking about. The low of the lowest point of October 2016, near the 1.1648 zone, approximately around there. Because if you go further below, now what we're talking about here is the lowest point of January 2015, and this is when the Swiss central bank unleashed its currency, and you can see that this is what the spike we had that was against the euro. Initially they untied its currency against the euro, and we saw this nice good drop to the downside, which have also affected other other CHF pairs. So Now, again, coming back to this situation for now, if we see a drop below the 1.1793 zone, then yep, in a way, be very careful. This could travel further down towards the 1.1648, because this is a very good level here, near, or in a way, you could round it up towards the 1.1650 initially. This is near the low of the lowest point of October 2016. In terms of the upside here, again, very difficult to talk about the upside on this one. And basically for here, what we're going to do, for now, any move higher could be seen as a temporary correction to the before another leg of selling. So in a way, if we see a push above, let me just quickly adjust this. There we go. If we see initially a push above the around 119 level here, then in a way you could then potentially start looking at slightly higher levels, like the 1.2020, something like that, approximately around there, or even actually we could consider this downside resistance line for as a quick good test. But again, before we could aim for slightly higher levels, we need to see that good push above the 1.19 level. And the last pair for this session is the euro dollar. This is still flat, and it's not really exciting. It's, of course, as you probably can see, that this is not the week for the euro dollar. It's just kind of moving sideways here. So after it had a nice push here on Monday to the upside, after it broke this tentative downside resistance line, it remained above it, and now it's kind of moving sideways. In a way, some could say maybe it's forming a triangle here, so or a pennant. So in a way, this could mean that we could see a continuation of the prevailing trend. So we could see a push higher. The only thing is that with the upside, we'll take a very conservative approach and wait for a push above the above this week's highs near the 1.1250, and only then aim for slightly higher levels. In terms of the downside, actually we can get rid of this downside line. It's no longer probably just gonna be in our way, and what we're gonna mainly focus on is the 1.1162, 63, around there area. If you see a drop below this, in a way, this could increase the chances for a slide back towards the 1.11 zone. So keep your eyes on that one, guys. So in a way, if actually I'm gonna quickly adjust the highlighted areas here very quickly. There we go, just for our future reference. And this is the level that we're going to be keeping close eye on as well. So these are the two levels. We're going to wait for confirmation breakthrough one of them before kind of doing anything with the euro dollar. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me later on at my traders tea time, that's always 13:15 GMT, we'll have a look at some of these pairs, see how they've performed, and because we'll have all the data releases already, and it will be very interesting to see if we got it right. Okay, and like I said, for now, be very careful today, guys. It's Friday, last trading day for this week, and yep, I'll see you later in my traders tea time. Thank you very much, and bye bye.